markets in general were doing okay right before the COVID, and that was based on the fundamentals because the fundamentals of the economy were strong. Our unemployment rate was fine, and the economic indicators as well. And then when COVID hit around March, we saw some sharp declines. But after that, there has been some recovery recently in May and June. But the stock market has not reflected the fundamentals that much. The fundamentals are not that strong right now. We see in many of the states there has been some increases in the cases, and some industries, particularly, are still suffering. The ones that require person-to-person interaction, particularly. But then we still see the stock market doing pretty well. So that's really mind-boggling. And when you look at it in more detail, well, really, the stock market is responding to what the stimulus plans are doing. The Fed is injecting a lot of money to the economy. So that's increasing the liquidity. So though the fundamentals are not that good, the economy has some more cash. So that's how. We just saw the GDP decline in the second quarter, so that's April to June, and that was pretty bad. That was even worse than the Great Depression. That was 33%, the worst in the last 2 centuries, actually. So when you look at the prior declines in the economy, there are certain things that have worked, and I alluded to one of them before, like investing in the people, in the health of the people, and then focusing on the industries that were already failing, because the industries are more vulnerable. Now the malls were already getting empty, right? Even in our local mall in Kalamazoo, you were seeing fewer and fewer individuals and fewer companies investing as well, stores being shut down. And now we see those retailers going into bankruptcy because those were the more vulnerable industries. So we should focus on those industries. And then what has worked in the past is having a long-term perspective. Right now, it seems like what we're doing, particularly at the federal level, is try to look at the next day, the next few weeks, and in targeting those short-term policies. But what we should look at really is the long-term and have a long-term perspective. For example, how can we retrain our people so that they will have the skills? A lot of individuals are in declining industries. How do we relocate those individuals so that we can have them work in industries where there is more need, locations where there is more need? How do we support innovation? We haven't been investing in education that much recently. That investment has been dropping. So this is the time to make more investments in research and development throughout the country, as well as the companies, and particularly investing in more education. The pandemic is very much related to the economy. You cannot not invest in COVID and expect the economy to recover. Really, without the social distancing, wearing our masks, and investing in the vaccine, our economy will not recover. We know that. So it looks like the best places to invest and pay attention to are the COVID-related areas.